My name is Rob Ellis, Pink Development and Construction, and this is Miami Talk. So, we had a video earlier this week about basically setting up. The reason I moved here in 2024 was because of the development market, because land is so constrained, because the prices here are the highest in the entire country. There's some of the largest loans ever, some of the largest property prices ever, and we're gonna go through some of that and also the fund that I have, so that we're continuing to modify. So we initially earlier this week had a structure of a Series A. We began talking to a syndication attorney who recommended that we look at larger fund structures. And when we looked at Blackstone's um, Trust, who's actually a big player, they bought one of the big hotels this year from some of the big ones. If you start studying the transaction volumes, you're going to see that there's not that many players when you get this big. And if you want to enter the market, you have to be a player. So in the market, you have to have the amount of backing and things, which is why we're very cautious and why we spend a lot of time on due diligence and research and fund structures. And so what we decided is to go with a 506C. And that's because if you look at, I'm just going to pull up ChatGPT. We're going to go, how is BREIT structured? Is it an open-ended evergreen? And is it public or private? And did they do 506C? And what is assets under management? Are there any constraints to their growth? So we're just looking at, is there any limit across the board? Non-listed, perpetual life, real estate investment trust, open-ended or evergreen fund, which we've looked at these. Some of the largest funds that I've seen are evergreen funds, and um, it allows us to have an entire team of capital raisers, because if you're bringing that capital in and you're also and only in Florida and only in Miami in reality, and it's so complex, but you can raise these funds and also recapitalize through condo deposits. And from the articles I've read, it has never been a better time. All of the buildings in prime locations are selling out. I wouldn't say that is downtown. I don't see it. So you really want to study the market. That's all part of the first 9 month time frame, is looking at brokerage teams that are doing this. Sometimes there's the new guys coming out, but it's an open-ended, it's non-listed, it's non-publicly traded. Um, I'm pretty sure it was 506C. Let's see here. Let's see. Is Blackstone REIT a 506C or 506B? These are the two exemptions. And again, there's, we want to be able to publicly solicit. And so we'll go into that in a sec, but let's see here. Apologies. Blackstone is structured. Yeah, we already read that. Shares to the public without being listed, differentiating from private REITs, rely on exemptions. Reported a net value of 54 billion, total assets minus liabilities, snapshot of its ability to grow. Open-ended structure supports and face redemption requests, withdrawal limits to maintain liquidity. So that's one of the advantages down here, is if there are capital calls or people want redemption, so they want to pull money out, you sticking to a market where it's one of the strongest, and we're also to an asset classes that allows recapitalization, it allows you to do that. So um what let's read this article, because this would be interesting to see what their constraints are. It depends on what assets. Was a commercial juggernaut, 130 in assets, crown jewel, forced to limit withdrawals. They kept pulling out 4 billion endowment funds, flatlined. What's the damage? Should it be required, not met? will be perceived based on the value that it should be stressed worth. So again, that's more financial management and other things. I think annualized return, it's higher than other public REITs. And again, I think if you look at a Miami center focus, the projects here are so large that if you could own all of them, you would be able to trigger a lot higher. And if you have the amount of them and you focus in the right asset classes, you're going to be in great shape. We're going to go through some of those articles. Let me just go here. Mandarin Oriental is going to have a condo resale out over $1 billion, right? There's companies selling in South Florida for over $1 billion. One of the largest sellouts in history. This was written within 6 months. This talks about 800 million for Mandarin. This is written this month and it shows up to $2,500 a square foot. This is the main advantage of why you don't go anywhere else. The economics of this place and high rise and how much and how cheap land is trading, and especially with the live local that you can pump in here and push densities, not only densities, but also height and bypass. It's unbelievable. And we'll look at one of those, but you could see that Fortune Development Sales is saying it's one of the fastest and one of the highest. It talks about all the advantages there. It also talks about St. Isles, Regis. These are some of the other like main stuff. I was trying to read some of the articles. That was more for the gross square footage. Over 60% for Oak Inn Tower, which is 290,000 square feet parking podium, 900 feet, ultra modern, high end, class A. If you look at this, Swire Properties actually, let's see here, Swire Properties, office, bust. They picked the wrong asset class. Let's see here. They did this one. Let's see here, Miami. I think they did an office building. Let's see here. Canceled its plans for an office tower. This was just a few minutes ago. Swire Properties has canceled its plans. The decision came after securing sufficient pre-leasing commitments, leading to the company to list a 2-acre site for sale. Now, you could recapitalize that initially as a joint venture. The project aimed to attract that demolition of existing structures, strong pre-sales, 800 million. The company plans to reinvest proceeds from the potential sale of the One Brickell into its development, underscoring the strategic pivot toward luxury residential offerings amid a cooling office market. So this also talks about where luxury residential tower is robust and office is not. So waterfront and also I would argue hospitality sales as well are absolutely red hot. And I'm pushing the same trends where I'm from in Columbus, Ohio. Even though we're not Miami, urban adjacent, unlimited heights where land cost is what you can put on it. If I have the backing to be able to build a 700,000 square foot building, 1 million square feet, 1.5 million square feet vertically, it's unbelievable. And one of the things that you're going to see, Oak Inn Tower is on 0.8 acres. Oak Inn Tower, and it's going to have, I think, almost an $800 million exit. So when you read these articles, St. Regis, you talk about these, you talk about the largest construction loans ever, Oak Inn Tower. This is 900,000 square feet, right? And how you chop that square footage up. Key Biscayne, largest hotel of the year, $400 million, over $1 million a room. And hotel rooms aren't even 500 square feet. If you do that math, 1.4 divided by 500, you're going to get $28,000 a square foot. Hotel square footages are selling for greater than $10,000 a square foot. Ultra luxury condominiums. And I live in the W, which is a high rise mixed use condotel, right? And it's 50 stories tall. And I bet you if they could have gone taller, they probably would have. And that's what we're looking to specialize in. These types of, it's how big is the building? What do you put in it? Making sure you have a development budget. And the other thing that we're talking about is Um, there was a sale for $500 million, I think, recently. Let's open up some of these. Let's see what else I got in here. Let's say 500 million Brickell site per acre. Here you go. Waterfront, 500 million, 500 million, 1,000, 500 million. And it just shows Oak Rose assemblage. That was the interest. And then they close on it 4 acres. So over $100 million. And that means that in unlimited height districts, where I'm from, it's only $3 to $4 million in an unlimited height district. But in this city, it's over $100 million in Brickell. And so really where the big gains are where you can put 50-story buildings and the land costs 20 million an acre or 18 million an acre or 15 million an acre. And it's really in going wide with it. Can I get 2 acres and 3 acres? You know, land isn't limited in places like Wynwood, Edgewater. If you have all the brokers working for you, you're gonna have great deals, right? This is a company, Baz Development, that put in a 48-story tower with 500 apartments. It was gonna be 48 stories tall. I think they came down a little bit, 900 apartments, and they bought the site for 8 million bucks to 10 million bucks. I think it was 12 million. And this is what they're talking about, massive projects, and it's an art district, but you can't compete. Now that you have, this is the controversial 48 stories, 36 stories taller than the highest building allowed in Wynwood. This is upzoning, and this is what affordable housing commitments and the new loopholes. If I stuff 40% of those units and I break it up into hotel and I push all those units and they're all studios that are 300 square feet or 400 square feet, my gross floor plate of the live local set aside is almost nothing. It's not even 5% of the project. And that allows me to build another 36 floors. Unbelievable. It means absolutely nothing, right? In terms of these. So looking at those as an example, this is the sale comp of what they got. This was the assemblage on North Miami, 12 million, and they bought that back in 2015. It says they approved it and they haven't done anything. So capitalization is what comes down to this and the ability to secure it. So the land development side becomes the most important, which is what I study and what I do every single day. We have more than 10 to 15 projects going at once. And if you want to do this, right, this is where you kind of become. So we've redone the structure. It talks about looking at $500 million projects, or I think the sweet spot is 300 million to 600 million. And that's in areas like Wynwood, Edgewater, downtown. But downtown, you're not seeing the demand that you quite did in these other areas. You're seeing, if you plotted the number of transactions over 1,000 square feet over the previous 5 years, I know that downtown wouldn't even touch it. It's not really a residential area. It's more commercial. So in my opinion, I probably wouldn't. That is an unlimited height district. And we've looked at, I would say that the pricing's still pretty similar, 80 million to $100 million an acre. And again, the highest density is 1,000 units an acre. But I think you haven't seen really related group enter that market. And their stuff on 11 is really struggling. So overall, what you're looking at here is you'd be looking at the raise, a continuous raise cycle. You set this up into sub LLCs. It's a master feeder structure that allows for open-ended and also deployment of capital. The land entitlement arms the gains there. So if you have a land entitlement arm in an engineering firm that you own a whole thing of, and that's what this fund is, then the land entitlement gains in unlimited height districts or in buildings that are over 30 stories tall in Miami or over 750,000 square feet. If I have a site that's 40, if I want a 750,000 square foot building and I have an acre site and I can do 100% lot coverage, here's an acre. That means that I would need to be 17 floors tall, right? So now that's accounting for no parking either. So that's exactly right. You really want 36 floors. You want these 30-story buildings, these mid-rise or high-rise. I think high-rise is technically, what is the technical definition of high-rise? I think it's over 12 stories. Um, mid-rise versus high-rise. I think there's 5 to 12 stories. So yeah, over 12, which is what Wynwood was. So if you do high-rise development and you use live local and you put them in condo areas and you also put hotels in there, right? All of a sudden, the loopholes for land gains are the largest they have ever been. If you have what people are paying for the land for million square feet sites is 80 million an acre. So the land gains on these are 3 to 4x. You look for sites that are between 10 million and 25 million dollars that you can put these in. Really, the number one zones for it's going to be Edgewater and Wynwood, right? You need the best zoning attorney who understands live local, and you need a strong team in front of it. This is a family-owned company that hasn't really, I would say, had been well capitalized. But going back to the fund structure here, um, accredited, you're going to do the fund structure, 3D prime development sites. You're looking at 5 million checks and above. You want institutional level capital. You really don't want individuals. You're going to be engaging with syndication attorneys, securities attorneys, land use, and condo attorneys because to recapitalize that and use pre-condo sales, if you close on that site and you file the correct things and you start pre-sales, you're going to be in great, pre-selling can be for years, right? So while you're doing that, you can put a sales office down there, you can walk the site, you can clear it and set it up for that land gain. And once you have approvals on that, right? Um, then that's when you receive that land gain. So the approval process, you need to be pretty well capitalized. You talk about land acquisition, code GPs, it talks about the different construction companies. This talks about the land gain. Looking at their site, if they got that building approved, they would make more than $15 million on the land. And that land gain is what you can capitalize. So if you sit on a piece of land that's 40 million or 30 million and you get a 2x land gain, you're at 90. Even if you raise, and again, you do 50% condos and the condo exit is worth $500 million on the development, or then you can resell, right? You're looking at those sites. I don't think we've really seen that scale of development in Wynwood, but it's going to be controversial, of course, but that's why you use some of the best attorneys. The market valuation that we talked about, and this is why you focus in Miami and South Florida in general. St. Regis hotels, some of the largest construction loans ever, 500 million, 400 million, 300 million, 830 Brickell, 500 million, Waldorf Astoria, 600 million. You could see these are 1.7 million square feet. So you could do the financing per square foot. It's close to $1,000 a square foot, right? Or a little under it. Baz, that talks about a little bit about that stuff. The Oaken Tower, 900,000 square feet, the number of rooms here, right? These are 10,000 a key. And if you can break that up appropriately, you're going to be in great shape. Aston Martin was ultra luxury, over $1 billion, and it was all condos. You can see the exit. So with these projects, the choice of what asset class to go under, you shouldn't be going into anything other than hotel and condo. And and maybe some retail, limited retail, if at the advisory group of some of the top ones, you'd have to look at market sales. That might be first floor retail, right? So putting the parking above and having the entire gross floor plate on the first floor for retail is going to open up a lot of benefits for you. Putting public space on the second floor is going to open up a lot more retail for you. You see design district retail selling about $5,000 a square foot, single tenant. Talks about Diplomat, 800 million, one of the largest ever. Ritz-Carlton, one of the largest hospitality sales ever. Over 1.4 million a room, which is over $20,000 a square foot. It has a huge land play. It's over 10 acres. But this is what leveraging live local, condos, hotels, unlimited height districts, or districts on high-rise development where the gaps are there. It's going to take you. I looked at we underwrite land at 10%. If you have $1 billion sellout and you have an acre and you can put 1 million square feet on there, you need sellable square footage. You need to focus on that. So you really need to work with architects that broke the records, right? There's not that many. There's not that many general contractors and there's not that many development arms. But this becomes basically the structure of your fund. and eventually you go public, because the main reason is these scale developments are publicly traded companies. And if you bring in other revenue sources, you can work in partnerships with some of the largest brands. These brands, this building is worth more than Aston Martin's brand. If you look at what the Aston Martin brand is worth, even the company, I think tangibles and intangibles and everything, I don't even think it's $1 billion, right? The sell out for Aston Martin was larger than the company itself. The brand is exceeded current market caps, which is just unbelievable. And market cap brand value is based on consumer market cap. The brand itself. Yep. So what you're seeing, there's another statistic. What is the United States real estate values and land versus all companies and all industries? Is it still greater? There's a stat in here that's something you can never forget. The total value of United States residential and commercial, it's I think it's like at least another 15 trillion over all of the companies combined. Yeah, it's still around that. So real estate and land assets remain stronger, and you're in the number one development market, New York 2.0, where we're just starting to break 1,000 square feet. How many buildings in New York City are over 1,000 feet? Probably 10 or 20. Let's see. Maybe 10, 18. So you're seeing these, and you can see when they were developed, right? How many were developed in the last 5 years? And you're seeing like these residential towers. Some of these are Billionaires Row, right? And 270 Park is a residential tower that's 60 floors. And it was delivered this year, 2025. 7 in the last that over 1,000 feet. So ultra luxury residential. I wouldn't say as much for office, but you're seeing this same thing in Miami. And I would say that if they could go back and do it, it would be hospitality and condominiums, not office. So the ultra luxury stuff and the international draw of Miami versus New York, it's the same. It's a tier one city. I'm in a tier two city, and when I moved here, I moved because of the market economics that it is. But this explains why this is the best structure that's out there. So this is the fund. This is what it focuses on. I've looked at 500 development sites for the last year, and it's not that much. It's 8 checks at 5 million bucks, and you've got the land. You're set. And whoever pays for the entitlements gets fit. The entitlement gain alone, whoever funds those entitlements, they negotiate the upside. So if you have a realizable, the debate is how much of a land gain can I realize? If I buy something for 30 million and it's worth 90 million and I sell it for 60, right? You leave some for the next guy. You have $30 million there. If you want to develop it, right? You have $30 million gain. So if I funded that, you have to return some of the money to the partners. You have the entitlement gains of the people that went to the public hearings and negotiate and that's what we do. That's what I do every day in Columbus. I fly up 3 times a month to beat him with a hammer. And we're getting ready to do the same thing here. Live Local is here and is by far probably the best tool that's ever come around to make money in vertical development, not through density and through height. And I wish we had it in my state. I would love to challenge the home rule in our state and take it to the Supreme Court of Ohio and get municipal overrides taken, because I had an affordable housing committed project for 20 stories or 15 stories that was on a very small piece of land that got denied because we see the same land gaps. How much can I make? Right? I ended up making maybe a 8x return on the land, but it could have been substantially higher. So that is everything. Hope you guys enjoyed the video.